everyone, welcome to JAIIB CAIIB English Medium. My name is Aarti and I hope you all are doing good. So if you're also planning to clear your CIB December 25 in your first and single attempt, then do follow this series. Because in this we are covering your important MCQs, case studies, numericals as per your exam pattern. So without any delay, let's start today's session. So first question, as you can see here, that is about NPV. Yes, they are saying what does a positive NPV indicate about a project? A, the project is expected to generate less value than its cost. B, the project is expected to generate more value than its cost. C, the project will break even. D, the project should be rejected. So if you talk about NPV, that is what NPV means, your net present value. Yes, that is your net present value. Now when we talk about net present value, that says here you need to take sum of present value of future cash flows. Yes, here we are taking future cash flows, present value, today's value, and you are subtracting with your initial investment. Yes, you are subtracting with your initial investment. Now as per this calculation, you can see your cash flows are, this NPV is going to be positive or negative. If it is positive, you are going to accept that project. Okay. But if that is negative, you are going to reject it. Yes, you are going to reject it. So NPV, calculates about your project, whether you need to start that project or you need to reject that project. That is what NPV talks about. So if you read the first point, they are saying project is expected to generate less value than its cost. Yes, positive NPV they are talking about. They are talking about this NPV. The project is expected to generate less value than its cost. Cost is your investment amount. That is your investment amount in which you can see outflow of cash. In this you will see outflow of cash. Yes, so they are saying that value, yes, whatever the future cash flows you are going to generate, that is going to be less than its cost. So that is what positive NPV? No. The project is expected to generate more value than its cost. Yes, of course, whatever return you are generating, yes, whatever present value of future cash flows you are generating, that should be more than your cost. Yes, that is how you will get the positive NPV. That is how you can say this project will benefit you. But let's read other points. Project will break even. Break even means what? When your cost is equal to your present value of future cash flows. That is what break even means. This is not your option. Then project should be rejected. Yes, this is also not your answer. Correct answer is your answer B. Yes, this is your correct answer. Coming to next question now. If a project has an initial investment of 1 lakh, NPV of 30,000 at a discount rate of 9%, what does this mean? You need to identify when your NPV they are saying that is 30,000. Yes, as per the formula, sum of present value of future cash flows minus initial investment, in that your initial investment is equal to 1 lakh. Okay, they are not talking about this present value of future cash flows. They are just saying you are getting NPV if you discount future cash flows at the rate of 9%. They are just asking what is the meaning of this. Yes, what is the understanding you are getting from this point. So let's read. A, the project is not profitable. If this is 30,000, they are not saying positive or negative. So if it's pure 30,000, that means it is positive. Yes, otherwise they will give the negative sign or they will give some hint. But they are not talking about any negativity in this question. Yes, so this is not your profitable point, is wrong. Then project will generate 30,000 in profits after covering the cost of capital. Yes, this is your correct answer. Answer B is your correct answer. As you can see here, after covering your initial cost of 1 lakh, project will give you 30,000. Yes, so correct answer is your answer B. Again, C is your break-even point. No. Project's total cash inflows equal to 20,000. This is nowhere linked with your question. Okay, so correct answer as per this is going to be your answer again B. Yes, so this is about NPV, and remember in exam they're asking direct questions based on this NPV. Okay, now in this you have NPV, you have IRR. Yes, you have MIRR. So let me tell you all these NPV, IRR, yes, MIRR, then discounted payback period, yes, profitability index. All these methods are taking the help of time value of money. Yes, in exam they can ask you which method you are going to use for time value of money. And next side you have no time value of money, in which you take direct calculations. No, time value of money means you are going to calculate directly. Yes, we have only two methods, that is your payback period and your ARR. Yes, these are the two methods that you cover under your part in which no time value of money is adjusted. So remember, this is very important. In exam they can ask numerical questions, or based on the numericals they can frame this type of theoretical questions as well. Yes, so try to follow every session which we are conducting at 9 p.m. Now, apart from that, if you have any particular topic which you want to revise, or if you are facing doubt, you want multiple revision of that, you can share that topic through the comments. Yes, everyone? Okay, coming to next topic. Next question. Which of the following best describes the components of the SMART framework? Now, this question is from your module A. Yes, module A. Now they are asking about the full form of SMART. Now, what SMART is actually, we want our goal that needs to be SMART. But SMART full form is, S means specific. Whatever goals you are selecting, that needs to be specific. Like you all are targeting CIB, that is your specific goal. Yes, then M is your measurable. Yes, that is your measurable. At least you can measure it. Yes, like you all can measure it. What benefit you are going to get if you clear it. So that is what measuring. Then A, that is achievable. That is your achievable. Achievable means what? See, if you are starting now your CIB preparation, you can clear your exam, CIB. If you consistently follow your routine, you are consistently giving mock test, you are watching every session, you are practicing, you can clear it. That is for sure. But if tomorrow is your CIB exam, yes, and you haven't studied anything, then how could you can clear it? Yes, you cannot clear it. So that is what not achievable. That is not achievable. If you say after 1 month, means after 4 months, like in January or February, yes, I wish I could have, cleared it, or I wish, or let's prepare for December 25, that is going to be possible thing? No, that is not your achievable task. So always find achievable goals. Yes, then R is realistic goals. Realistic goals. Realistic goals means which you can achieve it. As you know, after clearing CIB, you are going to get 2 increments. That is realistic thing. But if you are saying we will be getting 10 increments, that is unrealistic thing. That is not true. So you cannot make such false statements. T means timely. Yes, timely you need to achieve it. Okay. So this is the full form of your SMART. So let's identify A, specific, manageable, achievable, result-oriented, timely. Manageable, yes, then next is your structure, measurable, aligned, relevant, tangible. Structured, aligned, okay, specific, measurable, achievable, realistic, timely. You might say all these are linked with these terms only, so why they are wrong? Because in exam they want specific terms. They want specific terms. You cannot give related terms based on the statements. Yes, that's why this is not your correct answer, not correct answer. Simple, that is also not correct. Motivational, that is wrong. Accountable, responsible, testable, all these options are wrong. So that's why correct answer is your answer C. Yes, C is your correct answer. Yes, everyone? Okay, coming to next. who coined the term management by objectives and introduced it in the book of practice of management? Yes, in exam they can ask this type of questions in which they are asking about the author, or who is the contributor of the terms, or which contributor gave which book. They can ask anything. Yes, so make sure you are reading the names of the contributors, what they contributed, what books they have given. Everything you need to remember. Yes, everyone. So let's talk about management by objectives. Yes, so management by objectives is what? In which they are saying that your management plus employees. Yes, here your management plus employees, they all are going to come together. Yes, they all are going to come together for achieving your organizational goals. Yes, employees will try to accomplish their own goals. Along with that, they also going to help for achieving organizational goals in your specific time. Yes, that is what management by objectives definition is. Now, who gave this? Henry Fayol, Frederick Taylor, Peter F. Drucker, Elton Mayo. Now, this is your homework question. I think this one is the easiest question which I can give as your homework. Yes, everyone, share your answer through the comments. Okay. So, as I gave you the definition of MBO, yes, in your exam they asked the definition as well. So, make sure you are reading the definitions. Okay. Next, a company invests 1 lakh in a project that generates the following cash inflows. Okay, as you can see here, there are different cash inflows. Year 1, 2, 3, 4, 30, 40, 60, 40,000. You need to calculate payback period. Okay, so here you need to calculate payback period. But payback period, when formula is also there, when you take your initial investment divided by annual cash inflows. Yes, but you can apply this formula only when your cash flows, this cash flows are constant. Yes, you can apply only when your cash flows are constant. But as you can see here, your cash flows are fluctuating. Yes, so here we need to make a cumulative statement. So how to make cumulative statement? 1, 2, 3, 4. Yes, what are your cash flows? You can see here future cash flows, that is 30,000, 40,000, 60,000 and 40,000. Now here we need to take cumulative. Yes. Now how to take cumulative? You need to start with your first year as it is 30,000. Take this first year and add with your second year. Yes. First year as it is you need to take, then add with your second year, that is going to be 70,000. So till second year you have recovered 70,000. Then from your third year you need to add your 70 plus 60,000, that is going to be your 1,30,000. Yes, 1,30,000. And in case of fourth year, again take 1,30,000 plus 40,000, that is going to be 1,70,000. Yes, so this is your total recoverable amount. But as you can see here, you invested only 1 lakh. You invested only 1 lakh. Means we are not going to calculate till your fourth year. See, I'm just telling you, if you are watching it first time, no requirement to calculate till your fourth year. Why? Because we are calculating your payback period. Yes, we are calculating your payback period. And as per your payback period, they are saying, as per your payback period, they say that as soon as you recover, yes, you recover invested amount, you need to stop calculating. Yes, you need to stop calculating. Okay, so as soon as you recover your 1 lakh, you need to stop calculating. So as you can see here, till your second year, you recovered 70,000. So till your second year, you recovered your this 70,000. Now, how much extra we want? What extra amount we want? We want more 30,000. Yes, we want more 30,000. Yes, but if you see your next year, you are generating 60,000. Now 60,000 is for full year. 60,000 is for full third year. But we are not going to take full 60,000. We want to take only up to 30,000. Yes, so what time we are going to take this 30,000 divided by 60,000. So that is going to be 2 plus, that is your 0.5. Yes, this is your answer. That is, payback period is going to be 2.5 years. 2 years and more half year you require for recovering this amount. Yes, so this is your answer. Okay, everyone. This is how we need to calculate payback period. Again, I am repeating. In case of different cash flows, you cannot take direct this formula. Yes, you need to prepare this cumulative statement. But as per payback period, you need to stop calculating as soon as you recover your invested amount. As soon as you are recovering your 1 lakh, you need to stop calculation. You cannot see the profit side. You need to stop immediately. So as you can see, till your second year, you recovered 70,000. Till your second year, you recovered 70,000. Further, you want 30,000 more. Yes, 30,000 more. So what you will do, if you add this 70 plus 60, it will cross 1 lakh. It will cross 1 lakh. So that will violate your definition of payback period. So here we need to take this, decimal calculation. Yes, we need to take here proportionate calculation. If year amount is 60,000, we want 30,000. So in how much time we can recover it? So that is going to be a 2.5 years. Yes, this is how we need to calculate, and correct answer is your none of the above. Correct answer is your none of the above. Okay, next. Which of the following is a key distinction between private equity and venture capital? Now, these are the ways to which companies are getting funds nowadays. Yes, earlier in traditional ways, we used to take loan from bank. Yes, we used to take amount from our family members. But nowadays, companies are there, firms are there who are giving funds for their different business ideas. So we have two ways through which, as a company, they can receive the funds. First is your private equity. Next is your venture capital. Now, venture capital, they funds in startup companies. Yes, like your Ola, Uber. Yes, all these are startup companies. But private equity, they invest in already established companies. Yes, they are already, they are investing in established companies, not new company. So let's see what is the key distinction. Distinction means they're asking about difference. A, private equity typically invests in established business with a proven track record, while venture capital focuses on early stage startups. We can say this is your correct answer. Let's read other points. Private equity deals exclusively with small businesses? No. While venture capital targets large corporations? No. Private equity rarely involves active management, while venture capital investors are deeply involved in no one is involved in day-to-day operations. There is no difference. This is totally wrong. There is a difference between these two. Correct answer is your answer A. Yes, correct answer is your answer A. Okay, everyone. Now, next, match the types of forecast with their correct description. We have in one column types of forecast. Next side we have descriptions. Yes, first you can see long term, medium term, short term. Next side, focus on operational and business budgeting. B, provides an overview of the company's future needs over the next 3 to 5 years. Covers a brief period, typically from 1 to 6 months. So short term is your third C. Yes, then medium term talks about your budgeting and all, so that is your 1. And first B, because here we are going to talk about long period of time. First B. So you can eliminate this point, and second A. So correct answer is your answer A. Yes, answer A. Okay. So this is about your warrior session, in which we completed your theoretical questions. Even we solved one numerical. Yes. So if you want to join my Telegram group, you can use this QR code. But remember one thing, if you have any further query, if you have any further discussion, if you want to do, you can share your doubt through the comments, or you can join my Telegram group and you can share your doubts there. Yes, and apart from that, if you are registering and while doing the registration, if you are facing problem, you can call on the number which is given in our description box. Even for any batch purchasing, if you want to take, you can call on the number which is given in our description box. And for the maximum coupon code, you can use this Y895. Yes, for the maximum discount coupon code, this is the Y895 through which you will get maximum discount. So with this, I'm winding up this session. Thank you everyone for joining. Take care and bye-bye.